Thanks so much for tuning into this earnings conversation with VA Tech Wabag. They came out with quarter four numbers late Friday, and to talk about how the quarter and the year went by as well. Of course, because it's a quarterly number, it's an annual number, Q4 number. We're joined by Rajneesh Chopra to talk about his thoughts on what the quarter and the year meant for VA Tech Wabag and what the outlook ahead could be like. Mr. Chopra, great having you. Thanks for taking the time out. Hope all is well. Um, can you tell us about what you thought about the quarter? Because when one looks at the headline numbers, the revenue that is, Q4 and FY23 look to be years and periods of consolidation because roughly 2,950 crores for the year versus FY22 for the same. But when one looks underneath the hood, the operational metrics, you've improved quite significantly. So how would you look at the quarter and the year?
A very good morning to you, Neeraj, and your viewers, and thanks for having me on your show. I think what you said is absolutely correct. There has been a strategic shift. We, formulated a strategy in 2022, which was approved by our board. Now, as per that strategy, we said we are a pure play water technology company, so we need to focus more on technological orders. So that's something which we started doing. The second part was that we need to focus on high technology contracts like desalination, recycle, reuse, industrial effluent, especially in oil and gas, which are very, very challenging. And you have very high class and international competition. So we started focusing on that. We had to increase our share of international orders, our industrial orders, and high technology orders, which we exhibited at the end of December 2022. And apart from that, the focus was on ensuring that a majority of our order book, when it comes to municipal sector, they are either backed, which are funded by multilaterals or by sovereign funding. And if you see today, more than 90% of our municipal orders, they are backed by either sovereign funding or they are multilaterals. Recently also, the two big contracts, we won 400 MLD desalination in Chennai, which is funded by Japan International Cooperation Agency, and the other one in Bangladesh, which is again funded by World Bank and EIB. So all these steps which we took and we implemented, has resulted into what results we have been able to show. In our opinion, these are very robust operational results. And definitely we have compromised on the top line because, if you see the quantum of EP contracts, so we did not take construction in a lot of international contracts. So definitely that had an impact. But if you see at the bottom line and the cash, I think that was a focus area and we have done exceedingly well there. If you see today, our total order book, it is at a historic high of 13,000 crores in our 100 years, 99 years of history. It has never happened. If you look at our EBITDA, it is in excess of 350 crores. Operational PAT is more than 230 crores. And that is what we call a real robust performance. And going forward, I think we will continue to work in that direction.
Got it. And I have some follow-ups to this, but before that, just a small clarity for the quarter, the arithmetic sake. This write-off that you've done, now the question that comes to mind, because you've taken this policy of being very conservative when it comes to these receivables from the company, because I remember about a year ago, you said now we are looking to move beyond that. If it's there, it's there. When it comes, it comes. Our business will be independent of that. But this quarter four has seen a write-off as well. Would you reckon that if things don't go if things don't go positively for the previous receivables, are there any more write-offs that are anticipated in FY24? Or will it be a year bereft of write-offs?
So, Neeraj, I think this has been a topic which has been discussed almost every quarter in my every interaction.
Not the last 3 quarters at our interaction, Mr. Chopra. So I'm bringing it up at the end of the year.
So I think with this, we have cleared almost everything as far as Gencos is concerned. And the second part, what you said is we have an 111 crore receivable from TS Genco, I think, which is, we feel it should be, culminate sooner or very soon. The other what we have written off, they are all sub judice. Something is in NCLT for more than 5 years. Others, something is in Supreme Court or High Court. So our board took a decision that we will keep a write-off, but our effort to realize that, receivables will not go down. But this, reflects a true picture of our, performance, our core performance going forward, and both our stakeholders, shareholders, and board, and that's what they wanted to see, and that's what we have reflected. Secondly, we had a real robust, because of our change in focus to bottom line and cash. We had pretty good results, so we could afford, write off this thing in one particular year itself. So these are what I would like to say about our write-offs.
Got it. Now, you mentioned about the order book being at the highs that it is at. Can you tell us about the nature of the order wins over in Q4? We've had a in between quarterly results conversation on one of these order wins that you've had as well. But just when you summarize the summarize the quarter, what was the nature of the order wins? What was the quarterly order flow? And are you hopeful of this pace of order flow that you are getting currently of it, which is impressive, continuing into FY24?
So I think as you just mentioned, I think in our last interaction, I said Q4 we should exceed 5,000 crores, and that's what we achieved. The two major orders which came in the last quarter, we all are aware, that's a Chennai desalination, which is 400 MLD, which is probably the largest in South Asia. And with this, we will contribute out of 750 MLD desalination capacity of Chennai, more than 500 MLD, Wabag will be contributing. So that is 4,400 crores. And the second one is, a Pagla sewage treatment plant, which is in Bangladesh, which is again close to around 800 crores. So these two contracts are something which are the major contracts which we won. The second part of your question, going forward. So as far as going forward is concerned, I think we have a pretty good order pipeline. But contracts like, Chennai Desal, I think we do not foresee this, coming every quarter. But this year we clocked around 6,800 crore worth of orders would come to 13,000 plus crores position. So going forward, I think our endeavor will be to be closer to what we have achieved in the last fiscal year in terms of order intake. And again,
Mr. Chopra,
we continue to focus on international orders as well.
Yeah, agreed. And you mentioned this. Now, as somebody who's intrigued by the, what happens to a business in a scenario when they take a quantum shift from what they have been doing to what they want to do, I'm just trying to understand your order book as it stands. I presume would be a mix of some of the legacy orders as well, some very impressive new order wins that you've had, and maybe in some cases, because the street as well is trying to figure out that what could the profitability be for the orders like the Chennai order. So I'm just trying to understand here that in the mix of orders that I don't know if you've done that analysis, but which you might execute in FY24, what would the percentage be of some of the low margin orders, execution only, versus some part of maybe the Chennai desalination order or some other order, which is wherein maybe the receivables also will be slightly fast paced and they are backed, etc. And maybe the profitability is higher, and maybe some average orders. Can you tell us something about that?
Yeah, if you're referring to Chennai desalination order, it's an EPC contract. So obviously it has a construction component and a turnaround time of around 3 years. Right. So definitely, we have a C portion there. The margins will be at par with what such contracts have globally. But our overall endeavor to increase the margins, as I said, will continue to be there by bagging more industrial orders like what we have in Russia, what we have in Reliance, and also international orders, especially in desal, recycle, reuse segments, which are, which will give us a better margin as well as a better cash flow. So that will continue, and I think we are pretty hopeful that we'll be able to continue to give a double-digit EBITDA going forward.
So even on the Chennai desalination, I presume that could be the nature of the numbers, so to say?
See, as I said, our margin in EP orders is always on the higher side. So Chennai Desal is an EPC order, so it could be lower. I may not be able to give you the exact number, but overall, as a company, we will have continue to improve our margins, and definitely will be in a double-digit EBITDA figures going forward.
Got it. Now, Mr. Chopra, then the key question that comes to mind is that would FY24 as well, because transitions like the one that you embarked upon may not necessarily get done in 6 to 9 months. We're just trying to understand, would FY24 from a revenue front be still a year of consolidation while you continue to change the company, improve the operational metrics, etc.? Or could we see some growth as well? There's a very impressive order book. Does it translate into revenue growth in FY24 itself, or could it take some more time?
I think your guess could be even better than mine, being an analyst.
No, not at all.
When we have a EPC, such a large EPC orders, 2 large EPC orders of almost 5,000 crores, definitely there's going to be a growth in the top line. And as I just now mentioned, I think our margins at EBITDA level will continue, since we do not have now that hangover of ECL provisions on our Genco receivables every year, which was actually muting our real performance. I think we'll continue to have a double-digit, EBITDA margins going forward.
Okay. I have one final question, Mr. Chopra, before I let you go, because I understand you have a busy morning. I understand orders like the Chennai desalination order don't come every quarter for sure. Just trying to think about whether you are bidding for, actively searching for, or expecting, forget the magnitude, but the nature of the order win that you've just had, the 2 order wins that you've just had, anytime in the next 6 to 9 months, you reckon that's a distinct possibility?
Very interesting question, and very, very relevant to me, even personally. I think we are already, not only searching, we are actively bidding for such large contracts. If you see over the last 5 years, the average ticket size of our contracts has increased. The number of contracts may have reduced. And that's again out of my intent. It's not that, so that the management bandwidth is equally focused on all large contracts. So going forward, I think both in geographies like Middle East, Africa, as well as in India, we are looking for larger contracts, and maybe not to the magnitude of Chennai Desal in India, but overseas definitely there are opportunities which are matching to that extent.
Great. Well, we wish you all the best for a continuation of the splendid operational metrics, and maybe improving that if it's possible for FY24, and better top line, as well as more order wins for you, Mr. Chopra. Thank you so much for speaking to us today. All the best for the quarters ahead.
Thank you. Thank you so much, Neeraj.
The pleasure was ours. Viewers, thanks for tuning in.